Have you ever stared at a chart and thought, why on earth did the price just move like that? One moment it's calm, the next it's exploding up or crashing down. You enter a trade, you're feeling confident, and then boom. The market whips against you, takes your stop loss, and then goes exactly where you thought it would without you. If that's ever happened to you, and trust me, it happens to every trader, you've probably wondered if the market is rigged. And here's the truth. In a way, it is. But it's not rigged against you personally. It's rigged in favor of the people who understand how the game really works. Welcome back to Profit Mind Lab, where we talk about trading psychology, strategies, and the mindset needed to not just survive but thrive in the markets. Today I'm going to take you deep inside the world of price movement. Forget the surface level explanations you've heard before. Forget the idea that news alone drives markets or that some magical indicator is the holy grail. Today, you're going to see the truth. The real power behind price moves is psychology, liquidity, and the invisible hand of institutions who understand both better than anyone else. By the end of this video, I promise you'll look at every chart differently. You'll see the fingerprints of big players, you'll see the emotional traps laid for the retail traders, and you'll have the knowledge to stop being prey and start hunting alongside the winners. Think about it. How many times have you seen Bitcoin rally for weeks only for some good news to suddenly appear and justify the move? Or a stock tank quietly over months, and then one day a negative headline drops, and suddenly the media says that's why it fell? No, the market moves first, the news comes second. Smart money knows this. They move before you even see the headline. That's why trading news is like chasing shadows. So, who's really moving the market? It's not you, it's not me, and it's not the thousands of small retail traders trying to scalp a few points. The real movers are institutions, hedge funds, market makers, big banks, whales in crypto. These are players with billions, sometimes trillions at their disposal. They don't just join the market, they move the market. But here's the thing, even they can't just push price anywhere they want. They need liquidity. They need buyers when they want to sell and sellers when they want to buy. And where does that liquidity come from? It comes from us, from retail traders setting tight stops, chasing breakouts, panicking in crashes, and getting greedy at the top. Let me give you an example. Have you ever noticed how often price seems to hit your stop loss perfectly before reversing? You're not cursed. That's liquidity hunting. Imagine there's a pool of stop-loss orders sitting below support. Institutions see it. They push price just low enough to trigger those stops, collecting all that liquidity, and then boom. Price reverses? To you, it feels unfair. To them, it's just business. That's how they get filled at the best prices. And the quicker you accept that, the quicker you stop blaming the market and start recognizing the game. Now let's talk psychology, because that's the fuel of every single move. Fear and greed. That's it. Two emotions control the entire market. Fear makes traders sell at bottoms. Greed makes them buy at tops. And institutions? They exploit both. Let's rewind to March 2020 when the pandemic hit. Markets around the world collapsed. Retail traders were in panic mode. Fear was everywhere. People were dumping stocks for pennies on the dollar. Meanwhile, institutions were buying. Quietly, strategically, they scooped up positions at a discount. A year later, they had made trillions in the recovery rally. Fear drove the losses for retail. Patience and psychology drove the profits for institutions. And greed works the same way. Remember the 2021 crypto boom? Everyone and their neighbor was suddenly a Bitcoin expert. Prices were skyrocketing and retail traders were piling in late, fueled by greed and FOMO. Institutions? They were unloading into that greed, selling their bags at record highs. Let me start with a story. Back when I first began trading, I thought I had it all figured out. I had CNBC on in the background, alerts on my phone, Twitter notifications on full blast. Whenever news broke, I was ready to jump in. Earnings beat? Buy? A negative headline? Sell. I thought I was playing smart. But here's what happened. I lost again and again. I'd enter after the news only to watch price reverse on me. And it didn't take long to realize that by the time the news hit my screen, the big players were already positioned. They weren't reacting. They were anticipating. The news wasn't moving the market, it was simply the excuse for a move that had already been engineered. And when the crash came, retail was left holding the losses. That's the cycle. Fear and greed move markets. Institutions understand it and they profit from it. Retail traders ignore it and they get trapped by it. Now, here's where it gets even more interesting. The market doesn't just move randomly, it moves from one liquidity pool to another. These are areas where lots of orders are sitting. Stop losses, pending buy stops, pending sell stops. Think of it like pockets of fuel. The market is always moving toward the next pocket. Institutions use these pools to fill their orders. That's why you see so many fake breakouts. Price pushes just above resistance. Retail traders jump in thinking, this is it, the breakout I've been waiting for. But what happens? Price reverses. Why? Because the breakout wasn't real. It was a trap. Institutions use that pool of buy orders to sell into, and then the real move began, in the opposite direction. I'll never forget one trade early in my career. It was euro to US dollar. There was a strong resistance level. Price tested it multiple times, and one day, finally, it broke. I jumped in, thinking, this is the big move. Within minutes, the market reversed, slammed me with a loss, and kept dropping for days. I was furious, but when I looked back, I realized it wasn't a breakout. It was a liquidity grab. Institutions needed buyers at that level to sell into, and I was one of them. Once I understood that, my whole view of charts changed. I stopped chasing breakouts. I started waiting for the trap, then trading the reversal, and my results flipped. This is why I say, every chart pattern you know, head and shoulders, double tops, flags, they're not magic, they're psychology. A double top? That's buyers failing twice and fear taking over. A bull flag? That's profit taking mixed with greed returning. Even support and resistance levels aren't just lines, they're emotional zones. Support is where people feel safe buying. Resistance is where people fear it's too high. Once you start seeing charts as stories of fear and greed, they come alive. And when you read the story right, you can see where the next chapter is likely to go. But here's the hardest part. Patience. Knowing all this is one thing. Waiting for the perfect setup is another. And this is where most traders fail. They know about psychology, they know about liquidity, but they can't wait. They want to be in the market all the time. They treat trading like entertainment, not a business. And impatience kills accounts. Think about institutions again. They wait. They'll watch a level for weeks, even months. Retail traders? They can't watch a chart for 10 minutes without clicking buy or sell. But here's the truth. Trading is about waiting. Waiting for the trap, waiting for the liquidity sweep, waiting for the emotions to peak. And when they do, that's when you strike. My biggest win ever came from patience. It was a gold trade. I saw price hovering just below a key level with liquidity building above. Everything in me wanted to jump in, but I waited. For 3 days, I watched that level. And when the breakout trap finally came, price swept the liquidity, reversed hard. I was ready. That single trade made more than my last 10 combined. And do you know what made it possible? Patience. The discipline to wait for the market to show its hand. Contrast that with my biggest loss. An impulsive trade on crude oil. No plan, no patience, just FOMO. And of course, it ended badly. That's the lesson. Patience creates profits. Impatience destroys them. Now, let me share the hack I promised. The one thing that transformed my trading. It's not an indicator. It's not a secret system. It's journaling emotions. Sounds boring, right? But listen, This is the cheat code because trading isn't just about numbers, it's about psychology. If you only track entries and exits, you're missing half the story. But if you also track how you felt before, during, and after the trade, you'll start to see your own patterns. You'll realize you cut winners short when you're scared. You'll see that you overtrade when you're bored. You'll discover that your worst trades happen when you're chasing FOMO. And once you see those patterns, you can break them. Here's how. Every time you trade, write 3 things. 1. How you felt before entering. Were you calm, nervous, excited? 2. Why you entered. Was it based on strategy or emotion? And 3. How you felt after closing. Relieved, frustrated, confident? Over time, this becomes a mirror. And unlike your brain, your journal doesn't lie. It shows you who you are as a trader, and when you face that truth, you gain power. You gain control over yourself. And once you master yourself, no market move can shake you. So let's wrap this up. What's the real power behind price moves? It's not just news, it's not just technical indicators. It's the psychology of the crowd, the strategies of institutions, the traps laid by liquidity games. It's fear and greed over and over again. And here's the good news. You don't need billions to play this game. You just need awareness, patience, and discipline. When you stop reacting emotionally, when you stop chasing every move, when you start thinking like the big players, you stop being prey and you start hunting alongside the winners. If you got value from this, smash that like button and subscribe to Profit Mind Lab. Share this video with someone who's struggling in their trading journey. They need to hear this. And drop a comment below with your biggest takeaway. Was it the truth about liquidity pools? The role of fear and greed? Or maybe the journaling hack? I read every comment, and your feedback helps me decide what to cover next. And if you want to take your psychology game to the next level, check the link in the description. I've added a free trading journal template that you can download today. Remember this, the market isn't against you. The market isn't your enemy. Your emotions